Hello and welcome to BQ Prime. You're watching Trade Talk, and I am Hiral. A very good morning to all the viewers. An interesting day of trade is what is lined up for us today with the kind of moves that we've seen in yesterday's session. In fact, you had the Sensex, which already hit an intraday record high in yesterday's session, and Nifty was just a whisker away. A 12-point miss is what we saw in terms of Nifty from touching its record highs. If you see in terms of major buying, clearly was seen in the financial space, specifically NBFCs. And if you talk about NBFCs as well, that's what we've been discussing over the last couple of trading sessions as well, that it's the NBFC space which is garnering higher interest vis-a-vis what's happening with the banks from the private as well as the PSU banking space. Overall, if you see the kind of pattern that's emerging over the last couple of trading sessions is that there is buying interest coming in at lower levels. And this is clearly what is leading to the outperformance in terms of markets. There is resilience in the markets. There is that firm, overall structure that we have been witnessing as well. And again, the strong flows that we are seeing from the FIs as well as the SIP book in terms from the domestic market, both these factors are something which is supporting as well. Clearly, if you go to see the only place where analysts are saying that you have to be vigilant about is where rich premiums are prevalent as well as valuations. So that's the space where you need to watch out for. But clearly, there is some bit of a balance in terms of where risk and reward goes. So that's what the markets are looking like. But from a concern area, the monsoon, if you go to see, the rainfall has been 33% below normal. And this is as of June 21. So clearly, the monsoon remains a key concern for sentiment that we need to watch out for. Apart from that, you have US Federal Reserve Chair Powell's two-day testimony before the Congress, and that is something which will actually give us an indication as well to the Fed's future course of action. So lots to watch out for from a market perspective, but let's quickly move on to what the technical and F&O indicators are telling you for today's session. Firstly, let's look at the key support level. 18,780, I beg your pardon, is the key support to watch out for. And if you're able to maintain those levels, don't be surprised if we move to 18,900 to almost 18,950 in trade. Moving on, only if we are trading below 18,780, there is a possibility of a correction that could come in, and we could slip to levels of around 18,720 to almost 18,700. Talking about the F&O side of it as well, you have on the call side, highest OI was witnessed at around 19,000 strike, whereas on the put side, highest OI remains at 18,800 and then followed by 18,700. So 18,700 to 19,000 is the broad range that we've been tracking for the second consecutive session as well. And clearly, in terms of Bank Nifty, the trend is absolutely similar, where 44,000 is the crucial level, a psychological level that we have been watching in. So clearly, this is what it's looking like in terms of where overall markets go. But one sector that we will be focusing on in today's session is IT. Lots of news coming in, deal wins, visa relaxation. That sector probably will be in focus. Let's see if it garners buying interest in today's session. Tushar joins us to discuss more with us. Tushar, good morning.
Good morning. Good morning.
It's been a heavy evening and a heavy morning for you as well.
Yes. Starting last night, we have a spate of news that has come from the IT sector, starting with TCS, which just a couple of days ago, there was a news of scrapping of a deal in the US. Yesterday, they struck a big deal in the UK. So TCS has now extended a strategic partnership with Nest Pension Scheme. It's a UK government scheme for a deal that's worth at its top $1.9 billion. What they want to do now in that deal is provide administrative service or digitize administrative services for this pension scheme. The core value of the deal is 840 million pounds. If it extends to 18 years, that's a full scale. That comes up to about 1.5 billion pounds. So a big win for TCS, especially after coming off from Transamerica, and given the climate that we have right now.
Right, but overall, if you see from a deal perspective, how big would it be if you have to look at the past, the history in terms of the kind of deal wins that TCS has, and from a margin perspective as well? Do you think it's a good one?
In this climate, yes, and especially if you look at UK, it means a lot because this is their fourth large deal win in the UK market. They struck a deal with Marks and Spencers earlier this year. They struck a deal with Phoenix Group earlier this year. They tied up with another pension fund earlier this year. So the UK has been firing on all cylinders for TCS. US is weak for obvious reasons that we know, but I think TCS should get some solace from the fact that they're performing well in the UK and the Europe market.
Right. And overall, from analyst perspective, how has the mood been overall? Is there positivity for a TCS post the Q4 numbers and the commentary that we've heard as well?
So if we talk about the deal pipeline, yes, it looks good. Apart from that, the first quarter, the current one, April, June, is likely to be a washout and TCS will not be spared. That's what we are seeing from commentary as well right now, especially with the Morgan Stanley report that came in today, this morning. So Morgan Stanley is saying will be a challenging quarter. Revenue will be declining for the large cap companies, and that includes TCS. Infosys, it's not looking good either. It's going to be a flattish revenue growth for them. Still, Morgan Stanley prefers the large cap, the big boys of Indian IT over the smaller companies. Perhaps because they're more resilient to the pain that is being seen in their biggest market.
In fact, yes, they've also downgraded Ascent to an equal weight, and they have a target price of almost, I think, 1,500 on the counter. And staying with the earnings, as we just spoke about a little bit about how TCS would probably look at. Accenture is expected to report numbers today as well.
Yes.
And that's usually been the trend. Everyone looks out for Accenture, and that sets the trend line.
It's like Accenture's results are like a forebearer of what is going to come for Indian IT. According to Bloomberg estimates, Accenture may miss its revenue targets just because the consulting business is going to suffer. So if we just go by the numbers, revenue is seen at $16.5 billion, earnings per share is seen at $3 per share, bookings is at $18.23 billion, which is decent given the climate that we are in. But there will still be a revenue miss because the consulting business is suffering in this climate. Clients are not willing to spend money or dealing their consulting deals right now. What that means for Indian IT, as if I have to look at it, Indian IT is not as big on consulting as Accenture is. They are more service focused. So they may not be so much impact on Indian IT or so many cues coming from the Accenture results for Indian IT. But yes, Accenture is still the benchmark
right
when
now.
it comes to Indian IT's results.
Right. And apart from this, another stock, from the biggies that is in focus is a WIPRO. The buyback starts today, right?
Yes. WIPRO's second buyback in the last 5 years. At 12,000 crores that they're doing, and rupees 445 per share. That's what they're doing right now. It's still at a premium at the closing price. We just want to see what the details would come off given today's numbers.
Right. And in fact, if you see, WIPRO in terms of the performance as well in yesterday's session, a marginal up move is what we saw in terms of the stock price. 0.6%, if I'm not mistaken, was or a 0.3% open interest addition as well. So not a major one there. And if you see, the entitlement ratio for this one is around 4.3%. And this is for the non-retail segment. Anticipation is that the acceptance ratio will be in that range of around 10%. So a 15.5% premium to the current market price is what we are looking at overall. But very lastly, good news for Indian companies as well with regards to visas in the US.
Yes, the news that is coming in right now from the US, especially on the backdrop of Mr. Modi visiting Biden today, we are getting feelers from the State Department that there is some push from Indian diplomats to get more H-1B visas for Indians. Indians already account for 73% of H-1B visas, but this allocation or the push for H-1B visas suffered during the Trump regime. Indian IT companies have not been able to since recover from that pushback by Trump. But I think if this works out, this is a silver lining for Indian IT companies when this year is seen as a washout for them.
Absolutely. So I think lots to watch out for. Thank you, Tushar, for getting us an entire roundup in terms of what's on the cards for the IT sector as a whole. So watch out for the biggies, watch out for the smaller names as well. In fact, you will be watching out for an interview with the Scient subsidiary IPO as well, where Sajid will be talking to the management as well today. But moving on, the other two counters which are in focus in today's session are Piramal Enterprise as well as the Shriram Finance. We have Rishi who joins in. Rishi, good morning. Piramal has gone ahead, offloaded their entire stake in Shriram. Overall, taking this into consideration, how are brokerages now viewing both of the companies?
So now Piramal, as you said, offloaded its entire 8.34% stake on Wednesday. Now, following the stock sale, the Piramal's shares rose 15.77% intraday, which was the most in over 3 years. Similarly, Shriram Finance hit its upper circuit of 15% on Wednesday. Now, regarding what brokerages, MK increased the target price for Piramal to 1230, which was a 13.8% raise over its previous target price. Now, the management expects capital adequacy to raise to 36% as compared to 31% following the stock sale. And also, the cash proceeds that Piramal receives post this transaction is expected to be used to reduce its borrowings in the short term, while also enabling it to pursue attractive inorganic opportunities in the medium term. Now, lower borrowings will improve Piramal's NIM and ROA, but it may slightly reduce its ROE as well. Now, MK expects Piramal Enterprises to grow its retail, SME, and granular wholesale book, especially considering that the wholesale asset quality is holding up. Now, coming to Shriram Finance, well, Jefferies upgraded the stock to a buy and increased the target price by 47% to 2,130. And the stock, following the stock sale by Piramal as well as by the American private equity TPG, it has removed a key equity supply overhang that had been weighing on its valuation for so long. And a favorable commercial vehicle outlook is expected to drive a 15% CAGR for City Union Finance by FY26. And also, despite its lower NIMs, Jefferies expects its housing finance division to have an EPS CAGR of 16% and an ROA of 15% by FY26. Now, following the stock sale yesterday, Dolat Capital newly rated Shriram Finance with a buy along with a target price of 1900, which implied a potential upside of 9.6%. So overall, analysts are positive after the stock
on both
sale.
the counters.
Yeah, and as of now, it seems like a win-win.
Absolutely. Seems like a win-win in terms of both the companies. Thank you, Rishi, for joining in and taking us through the details. So good moves coming in there. In fact, it is a season of bulk and block deals in the last couple of trading sessions. Sajid is going to join in to get us. Well, Sajid, good morning.
Good morning.
I mean, absolutely last couple of trading sessions heavy in terms of blocks and bulk. Rishi just took us through in terms of Shriram as well as Piramal. Let's start off with what's happened with Shriram in yesterday's session as well. Who have been the key participants who've bought into the stock? Because that will tell us the kind of mood that we will see for these counters.
Some of the key ones are like Government of Singapore. Those are the kind of institutions which have gone into that that block deal. Piramal has made it very clear that they wanted to exit Shriram Finance. At one point in time, the purpose of acquisition was to maybe merge its financial services arm with Shriram, but that didn't happen, and as a result of which realignment, they're selling off their stake. So they have got that, and that that cash which was stuck in Shriram Finance has been unlocked, and they've been able to get that back into the entire into Piramal Finance basically. As I said, government Singapore, those are the kind of marquee guys who have been looking at getting quality. And Shriram Finance is a very good quality NBFC, and so they've seen that kind of names coming in. But there are two more block deals or bulk deals which are going to come in. One is Sansera Engineering. So to give you a perspective, 2 years back it came out with an IPO at 744. Now the block deal is happening between 799 and 841. One of the key investors, EBIN, is selling off nearly 14%. Current market price is around 842, so it's going to happen around that or a slight discount to the current market price, which is there. Delivery is another one where Carlyle is expected to offload nearly 2.5% stake. The IPO came at 487. The price band or the base price is around 285.5. So it's selling at a discount to the IPO price, which is there, and current market price is around 388.4. So many of the IPOs which we saw in 2021 are now gradually those investors are now unlocking or they're getting off because in 2 years their stock hasn't been able to recover or go past the IPO prices. So or give a significant gain, and those funds are now coming to a closure, so they are
So that's an
exiting.
interesting trend that we are picking up. Apart from this, a lot of other newsmakers, Sajid, in trade today as well. Which are the ones that we will be tracking?
Well, SEBI has been on an overdrive with respect to investigations, and now the investigations are much more, data friendly and understandable how they are doing, including the charts they make or the videos they're bringing out to make it as an explainer of what the modus operandi. They have come out with an investigation for manipulation of share prices, and 5 companies are involved in it. Moria Udyog, 7NR Retail, Darjeeling Ropeway, GBL Industries, and Vishal Fabrics. SEBI is restraining 135 entities for accessing securities market till further orders, and they believe that the ultimate beneficial owners of these 135 entities are the promoters of the 5 companies which has been mentioned earlier. So this is something which the street would be looking at for these 5 companies there. We have SGFC AMC. We saw block deal happening of Aberdeen exiting the company, and we saw SBI Mutual Fund increasing the stake by nearly 4% there, from 2.9 to 6.9%. So that's a good big bet being taken by SBI Mutual Fund on its peer and competitor SGFC AMC there. NTPC is raising 12,000 odd crores for its operational thing, but that's through a debt program or a bonds or debentures which they are looking at it. And Sham Metallics is trying to bring down costs by going for captive power. They're increasing their capacity by 90 megawatts. That will take care of 80% of the captive power, so bring down the cost with respect to manufacturing. They're also, increasing the sponge iron production by 1.65 tons per annum, and that would, lead to an enhanced capacity of nearly 2.7 million tons per annum for them.
So a lot to watch out for from the broader markets. But 2 more stocks. Thank you, Sajid, for getting us these names as well. But overall, apart from these names, 2 more counters from the pharma space that will be in focus is a Glenmark. But the US FDA has issued a warning letter to, Glenmark on its Monroe, North Carolina facility. Now, the company has said that they've already done a voluntary recall from the site in August 2021, and there has been no commercialization from this plant right now. So probably there will be no revenue impact coming in on this one. And lastly, you have a Lupin, which is in focus, and this is on the back of the approval that they got for Spiriva. Now, Jefferies has said that they have underperformed for a target price of 660. 18% to 75% of the incremental EPS is what they're looking at for FY24 to 25, and that is what was linked to this opportunity. Clearly, if you go to see, this is going to be a positive. Yesterday, we did see the stock rally as well. So let's see how today's session moves in on the back of the brokerage notes. So lots to watch out for in today's session. But clearly, if you see in terms of SGX Nifty, it's indicating a slightly muted start, but clearly, our markets in the last couple of trading sessions have not been mirroring that, and we are seeing markets move up, wherein buying at lower levels is what is coming in at least midday of trade. Lots more lined up on the other side. Please stay tuned, and that will be a wrap on our side from at Trade Talk.